just want to say this is a great panel. This is a lot of fun for me to be here with this group. I'm excited for this, and really what I want to do is have some fun, talk about trends, developments, the investment world, and with a look back to 2017, let's try to do that. Let's see how long we actually last doing that. But the idea here was to try to bring, as Barry said, different types of investors. So everything from sort of what I'll call the financial venture capital to corporate venture capital, angel. Orly's at a fund that does both direct investments in companies, but as well as investing in funds. And Orly has a particular angle on that, which we'll talk about in a minute, which I think will be extremely interesting. I'll also just say that I was trying to do it in my head here, we are at OurCrowd co-invested in at least one company with with everybody up here, and invested directly in Eyal's company as well. So with that, I want to start. We're sitting here in February 2018, and we're looking back. And when we entered 2017, there was a lot of hype around a lot of sectors. I talked about some of that this morning for anybody who was at the opening plenary. John certainly talked about a lot of hype around a number of sectors. And what I'm curious about is looking back, where did we invest? Maybe there was too much hype. Where did we get sucked into the hype? Where do we make mistakes? Let's start with that. Barry talked about that. And sometimes that happens. Everybody's talking about a particular industry, a particular sector, and you get sucked in because, I need to be a part of that. I got to have a piece of that. So maybe, Bruce, you want to start and give us a sense of where was there too much hype and you wish you hadn't got involved?
Sure. I guess good morning or good afternoon, depending upon what time zone people are in. Bruce Taragin, Blumberg Capital. We're currently investing out of our fourth fund. It's a little bit over $200 million early stage venture fund. I spent the last 20 years in Silicon Valley, lived and worked in Israel as well in the mid-90s, and I'm currently based out of New York for our team. And just to maybe hit on specifically on your question with the hype, to pick one category, and we can all, obviously, jump in around that. I think we're seeing a lot around AI and machine learning, and I think it's a really exciting area on the one hand. Just over the last week when I was in New York, I met with 3 CIOs at top 50 institutions in the world, talking about how they're trying to incorporate artificial intelligence, machine learning, deep learning, into their organization so they can become more profitable as an enterprise. But at the same time, they're trying to hire a lot of data scientists to potentially help in this regard. But I think that there's a danger of approaching maybe AI and machine learning in too generic a sense. So I think to the extent we can see applications of artificial intelligence, machine learning being applied in specific verticals that can potentially go horizontal, but are solving core pain problems for an organization where it can be plugged in effectively, and then potentially, again, really win in a vertical, but then potentially go horizontal from there. I think those will be opportunities where you're going to see success. But I think there's going to clearly, and we're seeing kind of the nascent stages of a lot of investment dollars going into anything that's suggesting AI, machine learning, deep learning, et cetera. And we're guilty of it as well, if you will, as a fund. I sometimes joke that our fund is like an AI, ML fund. And so much of what we've done has been, these software innovation. But I think there's going to be some challenges there as we look back, probably as we sit here in 2018.
Yeah, I actually looked at the number yesterday or the day before, and I had not even realized the number was this great, but investments in what are termed AI or ML, machine learning companies, I think is up about 15-fold in the last 4 years globally. And so, I think there is a question there about whether there's too much hype there or not. Maybe just let's play on that a little bit. Eyal, you run an AI company, and I know you've also talked to me about doing some of your own investing. How do you think the space played out in 2017? Was it like you expected? A little different? Were there some winners and losers? How did it start to separate?
First of all, thanks again for hosting us. I think now I have 6 or 7 co-investments with OurCrowd, and from an angel investor perspective, OurCrowd really changed the landscape of how companies can grow, specifically here in Israel. I have the chance to see both sides of the table as an investor and also as a co-founder of ZebraMed that does a lot of what we hear now as the hype of the AI and deep learning. And so on one hand, I can actually say as a witness, it's really here, it's really working. I'm being called every other month by one of our researchers, and that points me how the machines already taught themselves to diagnose another disease. And it's actually, you can see it on a very large scale of data, and it's there. And so from a technology perspective, it's there to stay. On the other end, you can actually also understand that everyone else are also doing it. And just to say that you're a deep learning or AI company is not really anymore a barrier. All those tools are becoming commoditized by Google and the like. They actually open source, many of them. And if you're a startup that in the beginning of 2017 just raised money because they said that they have AI, it will not be enough to last for 2018 and 2019.
Great, thanks. Other areas that, looking back, were too hyped and maybe we got too excited about too early or didn't play out how we maybe thought they should have or hoped? Orly?
Thank you. So we have a little bit of a different perspective because Vintage is a $1.3 billion fund of funds, secondary and a direct co-investment direct fund. And by the way, we help, so in my role of managing the value-added services, we help the whole ecosystem. So any company in Israel meet or get access to markets, so meet corporates that are looking for innovation in Israel. So what we see in our conversations, and we host CEOs and CISOs and CIOs of corporates about, on average, once a week. And in our discussions with them, we're trying to see what their pain points and what their needs are. And one of the things that they constantly say is, Israel is super strong in cybersecurity. And there's about, I'm not sure if you spoke about this morning, but there's about 500 cybersecurity in Israel. There's a big hype around it. And while on one hand, there is core technology, core knowledge, and core expertise in the country, we see a lot of companies that are just another feature rather than another innovation. And talking to those corporates, what they tell us, and the CISOs especially, is don't give me another feature, don't give me another alert. On the contrary, give me something that lowers the amount of alerts and orchestrates everything. So this is one of the things that we see that is a little bit overhyped, without hurting the great reputation of cyber startups, which are amazing startups here.
Sure. Rami?
So 2017 was a really amazing year. I remember talking here on OurCrowd. I can't remember what I said, but I was here. I agree that cyber is, is hyped. And the way to calculate it or to give it a rank is to try and figure out what percentage of those companies will be able to go through the next round of financing. So, we can predict like 5 years in the future what will happen to cybersecurity, but it's much easier to say how many of those companies will survive the year or the next round of financing. And I remember that, in our conference back then, you asked, the next question was, what are the most interesting areas? And if none of us is going to say cyber, then it's kind of validated issue that many cyber companies will have a problem in raising the next round of financing. But I want to put a caveat. I'm into the mainstream of cyber companies that are going to B2B and create actually a vendor fatigue because they see so many solutions trying to solve kind of the same problem. And I think this is where, we'll see a big number of companies that won't be able to raise funds. But there are all kind of niche verticals, autonomous cars, IoT, industrial, drones, you name it, that may be interesting as we go.
So you have a better memory than I do because I don't remember what that next question was. But thanks, that's great. So let's flip it around. Where were the hidden gems in 2017? Where were the things that either you wished you had found earlier, or where you really were digging to find those hidden gems because you wanted to find the next big thing and invest in that and partner with the next great entrepreneur, building on some big macro trends. So, Gonzalo, you want to take that?
Sure. Thank you very much for giving me this opportunity to be here. It's a pleasure to see you guys moving from a 3-person office to this craziness. I want to be a little bit of a contrarian. I think the fact that they were overhyped then opens up the opportunity for investors to start looking. So it's going to be more of an investor market, particularly for cyber. It might be worth waiting a little bit to see who survives. But also for AR and VR, I think last year there was quite a lot of excitement in CES. This year we didn't see a lot of new things, and so I think people have lost a little bit of excitement there. This is why I do believe that AR and VR is going to be an area that's going to be interesting. One area that they haven't mentioned, where I do see a lot of money going in and perhaps higher valuations than I would expect, is in automotive, both connected car and sensor-related technologies. And despite the fact that I'm excited about that market too, I do think there's a bit of a hype.
Yeah, that's. I'm going to come back to the hidden gems in a minute, but let's dwell on that for a minute. I would actually say, and we touched on it this morning, autonomous driving clearly seems like it's going to be huge. 10 years from now, my guess it's what we're all doing. We're probably not getting driver's licenses anymore. The question is, should I be paying for my teenager to even get a driver's license now? Great question. And in Israel, it costs a lot for your teenager to get a driver's license. So let's talk about that. It's February 2018. Through the course of 17, did we just continue to see valuations explode to crazy levels in these names? Was it justified? Were there areas of autonomous driving technology that were the most exciting, where maybe corporates were looking the most? Or, I don't know, was there a big surprise somewhere along the way and things kind of came crashing down? Orly?
So, on autonomous cars and looking from the eyes of corporates, indeed, as you asked, we see several areas that are interesting in autonomous cars. One, interestingly enough, just because corporates have to now innovate not on their specific core, innovation, but have to go to different business models, we see car manufacturers looking for different business models such as car sharing and ride sharing. And I'll give you an example. BMW in Berlin now and in several other cities in Germany and also in the US started a program called Ride Now, where you pay 30 euro cents per kilometer and you just get a BMW. You can drive everywhere and you can just drop it everywhere you want in the cities. So this is just one example of corporates, how they look at innovation. They understand that they have to innovate. Otherwise, they might die and lose to Uber-like. Other areas that we see that are of interest are V2V and V2X, so vehicle-to-vehicle communication, and vehicle-to-infrastructure, so essentially vehicle to anything, so the cars will talk to anything else. Other areas are in-car user experience. Without mentioning specific names, you guys have one company that is doing stuff in this area. So making the driver, the experience of sitting inside the car. And if you think about it, autonomous cars, you will sit in the car and you won't have to think about driving. So it's everything around entertainment and so on. Driver assistance. anything that, I mean, it's hybrid of different areas. It's driver assistance is autonomous and also insurance. And other hybrid areas that are really interesting are like, if you think about it, when you have dropped calls, it's not a big deal, but if your cell network drops when you're in an autonomous car, this might be dangerous. So the places where autonomous meets other stuff, cars and security, so all those would be very interesting and interesting for corporates.
Other thoughts? Anybody think happy they didn't invest in 2017 in autonomous cars, Bruce?
I was actually going to jump back a second to cyber, just because Orly and Rami touched on that. And so I think it's just interesting to note, I mean, approximately in 2015, there was $75 billion spent on cybersecurity, globally. And that number by 2020 is expected to go up to $175 billion. So that's one data point. The second, there was about $500 billion in cyber crimes, expected to exceed $2 trillion by 2021 as well. And I think when you layer on top of that, and Rami mentioned specifically IoT is one of the niches, which I think is exciting within cyber, where they're expecting in excess of $30 billion IoT devices by 2020. Currently, it's at about 10 billion or so. So I think when you see those types of compounded annual growth rates, that will create opportunity within, again, I don't want to throw the baby out with the bathwater, effectively. So I think there's some niche opportunities within cybersecurity. And then from our perspective, I would say back really in 2007, 2008, we had a CEO retreat in New York, and we met with really heads of IT at American Express and Visa, MasterCard, and just name your company, just a few dozen groups. Consistently, what they all said was that their systems were built in the 60s on mainframe. They were cobbled together. There was no thought around big data. There was no real-time reporting. There was no visualization, no analytics, no cross-border functionality. So for us, sort of the light bulb went on, and we said around Fintech, which I know is, again, overhyped and had a hiccup in 2016, obviously with some of the different lending platforms that were out there. But I think there's going to be a 2.0 with financial technologies, where you're starting to see this convergence, this fusion between, the banking industry that, it sort of did, they did the Heisman in the early days, which is, what a lot of these big enterprises tend to do. But at this point, they're starting to embrace. And I think you're going to see that fusion between, fintech innovation and, some of the larger banks that are going to have to either acquire, partner in some way, shape, or form. And I think you mentioned sort of the whole point of AI and ML as well. You're seeing, again, this fusion of there needs to be some level of human interaction still. And so it's this hybrid model where it's not binary, and it's not completely one or the other necessarily. But I am quite sanguine on fintech for 2017 and 18. And I think a subcategory of that is going to be this insurance tech as well, again, where you're seeing a lot of innovation. I mean, there's still a lack of really digitization, automation around that industry. And so anything you can do to expedite a process from, I mean, it's really just ridiculously arcane, and it's spreadsheets, and it takes months, and it's going to come down to literally seconds, online over time. So I think you're seeing that happen over really the next 5 years. I think those are some areas, not to marginalize the autonomous car and that aspect, but just to go in a slightly different direction.
Absolutely. Maybe Eyal, Rami, what are some of the areas that in 2017 you were searching under rocks for? You were looking for the hidden gems to find the next big thing. Rami?
Okay, so if I look from not from the technology side, but I look at the value add to evolution or to humanity, I see that there is one major inflection point that is backed by technology, and this is the ability to create predictions. If I use certain elements in technology, I can come with a machine that allow me to predict. It's actually not predicting, it's using current data in order to become more sophisticated. And it's actually, I think, a combination of like big data, how do we analyze big data in real time? It's on top of that, adding machine learning, I want to use machine learning capability and deep learning and computer vision in order to search that big data and to find anomalies, to find patterns. So we have big data, we have machine learning, and then I don't only want to use historical data. Whatever is in all my big data repositories is historical data. I want to add to that streaming data that's coming from millions of IoT devices. Can be cars, drones, humans, beds, radiation, radiology, images, and so forth. And I want to come with a conclusion. I think that this will have the major impact on our life across the board, from healthcare, like Zebra and Intensics on the right, all the way to Taranis, agri-tech on the left. So this by itself is something that I think is super substantial. In order to make it happen, you also need to go down the stacks. You need to go as low as to the chip layer because you want to create chipsets that are optimized to machine learning. You want to build cloud and private cloud and public cloud that can support it, and on top of those come the application. So that's my vision here.
Yeah.
Speaking of Taranis, just to emphasize, so Taranis is I think the god of rain in either the Inca or the Mayas ancient cultures, and now what Rami just said about prediction, people used to pray for something that will give them rain or to help them with their farms or crop or to increase yield, but now those prediction technologies by an Israeli startup named the name can do the same thing for farmers in Brazil or Argentina. So it's actually very strong. As an angel investor, I have a slightly different approach because one of the privileged angel investors have that we don't have the constant need to deploy capital, so we can pick. We don't necessarily need to search for things under rocks. And what I like to do when there is such a hype around different topic is to search for those companies that will be the enabler of the new ecosystem, and not just to make one bet. A recent example is a company called Colgene. So there is a lot of hype about genetic sequencing and all those new labs and tests. You can't really know who will win this, and there are hundreds of new labs, hundreds of new mutations. Doctors are confused, but if there will be one company that can be the marketplace of all of this and help the doctor find the right lab and and minimize the patient waiting time for the test, it can be a good winner. It might not be as big as the winner of the entire field like Illumina, but it will be like a Priceline.com for this field. So finding the enablers, there is another group of young students at the Zell program where I teach that are doing now sketching program for VR and AR. So the teams that are currently programming VR and AR project, they cannot share the project like other software groups. And so a new technology like this will be an enabler to a very hyped ecosystem that is currently is constrained because it's very new.
Great. So shifting gears a little bit, want to look back now, maybe from a bit more of a macro perspective. So in 2016, it was actually a bit of a tough year for technology IPOs in the U.S. Actually, in the first quarter of 2016, there was zero VC-backed IPOs in the U.S., which is pretty tough to believe because it was actually a pretty reasonable stock market. I think the rest of the year, for all of 2016, it was high single digit or low double digit VC-backed IPOs in the U.S. Again, hard to believe given the strength in the U.S. markets. There was several, but the largest IPO, as far as I know, of a VC-backed company in the U.S. was a company called Nutanix, which Bruce was one of the seed investors. And so, first of all, congratulations, Bruce. Great. We're the only seed investor. You're the only seed investor. Great.
We're the lead seed investor.
But that was 2 years ago. That was 2016.
Well, we seeded it back in 2010.
No, that I got that. But how did 2017 play out for? Let's talk about IPOs and exits in general. Was it a good environment, or was it a little tough?
My 2 cents on that, and obviously love to hear other people's thoughts, but obviously 2015 and 16 were terrible years fundamentally. I mean, we had a great year, no complaints. There's a tremendous amount of backlog now. I mean, there's probably a few dozen companies that are already gearing up to go out for 2017 and 18. So I think the expectation is that 17 and 18 will be, great years. I mean, if you look at the metrics, I think the S&P was up about 11% in 2016, and we're tracking now to be on, north of 20%, for the year. I think a lot might ride on, Snap filed their S1, so people are really taking a close look at that. And I think the fundamental question is Snap going to be a Facebook or is it going to be a Twitter? And what I mean by that is if you look at some of the metrics, probably in my opinion, one of the most important metrics to follow and look at is their daily active users, their DAU, which is actually, the growth on that is shrinking significantly. I forget the exact numbers, but it was like 15, 10, and only 5 million in Q4 of 2016. So I think that actually does not bode well. So that makes it more of a Twitter type of functionality where it has maybe fewer users and not massive growth, but people that are really sticky. In contrast to Facebook, which is an order of magnitude larger in terms of their metrics when they IPO'd and today has a market cap north of $300 billion. But their ARPU, their average revenue per user at Facebook, is something like $7 or $8, whereas currently Snap's more like $1. So personally, I think that it's TBD in terms of when they go out, how it's going to be received in the marketplace. I think $20 to $25 billion market cap expectation, raising a couple of $1 billion is lofty. There are some other really exciting companies that are looking to go out. I mean, you got Uber and WeWorks and Dropbox and Palantir potentially, and the list goes on. So I do think fundamentally it'll be 2017 and 18 should be a great year or 2 good years. But I think to the extent you have a bad IPO that comes out, that can really scare folks. And I know we experienced that with Nutanix, where there was a lot of, they really wanted to find the right time to go out, and there wasn't necessarily the pressure to go out, and they were very thoughtful and deliberate, and they went up 130% in their first day of trading, and have been up significantly as well, post IPO as well. So that would be my perspective.
Other views, look backs on how that went.
Just a note on. I think there's been a difference between the investor appetite in Israel versus the U.S. I think in 2015, the party sort of ended in the U.S., and we were expecting it to affect Israel significantly, and it didn't. I think 2015 numbers was 4.2 billion invested in Israel. Last year was 5 billion, so it continued to grow. And I think part of the explanation to that is that there was a ton of Asian money, Chinese and other countries putting money into Israel. In 2017, because of the Chinese government putting capital outflows controls, you're going to see a lot less investment coming into Israel because of a technical reason, not because there's less appetite, but because they can't take the money out of China. And that's going to impact also the potential acquirers. There's a lot of Chinese companies with a lot of cash that were candidates for many of our portfolio companies that possibly, unless they have really strategic technology, will not be acquiring in 2017.
Rami, did you want to touch on that?
The big difference between Israel and the US is that a vast majority of our companies are B2B infrastructure and are not B2C. And the exit environment is like 85%, 90% acquisitions by strategics that are actually the supply side of the market. Okay, they are serving the enterprises, but they are coming to Israel, like the Oracle and the IBM, Microsoft, and Cisco, and EMC, Dell, you name it, coming to Israel to acquire what we feel is disruptive technologies that will help them survive in the up-and-coming vertical. Or I like to say frontier technologies. Okay, it's a combination of disruptive technology in up-and-coming vertical. So I think that as far as we will continue and focus most of our investments, and I don't say that we don't need to invest in the Waze or the VR or of the play bars or the like of or tabula of the world, as long as we identify, our value in Israel. Most of our exits over the last 5 years, if I take medical aside, 85% were infrastructure play. And if we do that, then we will see an opposite trend to what you see in the US. In the US, you see a trend that exits are taking longer. And in Israel, exiting those disruptive companies are taking much faster. So we can give Liba as an example. It was acquired by Cisco for $350 a year after it got born. Why? Because Cisco could not afford having a company like Liba stay independent. Where is the risk in Israel? The risk in Israel that there is an increasing number of startups that are going to mature to growth layer. And they want to raise $15 to $150 million. And this is where they are beginning to dream really, far away of taking those companies public. And I guess that the vast majority of those companies will not go public. And there will be this game between the valuation hype in the growth and ended up the exits, when it comes to it.
So it's a great segue. So, Orly, you spend your time speaking to hundreds of multinational corporations, both in the U.S., mostly U.S. and Europe, and as Rami points out, multinationals have built over the last 10 years here in Israel, feet on the ground, huge organizations on the ground. Some aren't on the ground, but they fly in looking for technology and looking for acquisitions. So 2017, what was most interesting to multinationals? Where were they looking? Was it for technology? Were they looking for ways to address different geographies, different demographics? What are some of the areas that is most urgent, critical for a lot of the multinationals you're talking to be looking at?
So we see multinationals coming from across verticals and geographies. Specifically for us, and as you mentioned, we're hosting delegations of top management every week. About, I would say, 50% were from Europe and 50% from the US, just because Asia is less of our focus. But the areas of interest were a lot of cyber, again. And it's interesting because in our conversations before they come, we try to really find their exact needs. And so if it happens a lot that a corporate comes to us and says, show me all the cyber companies in Israel. And then you say, no, there's 550 companies in cyber. So we try to find the exact pain point for that corporate. So cyber is definitely one. Automotive, we see a lot of requests. Fintech, still a lot of requests coming. And it's interesting how, for example, in Europe, there's a big movement and banks get together to find how to solve their pain points, understanding that maybe in a few years' time, they might not exist anymore. So they get together. It's really interesting that competing banks get together and come to us and say, help us, find startups that would disrupt our businesses. And if you think about it, there's a really nice book written by Michael Dougherty. And he wrote there, if we look at the average tenure of an S&P company in 1958, it was about 61 years. If you look back to 2012, that average tenure was 18 years. And if you extrapolate it, by 2027, 75% of the Standard & Poor's 500 companies will die. So they're all now thinking, what do we do to disrupt our business? So to go back to your question, it's cyber, and then some of them ask for different cyber areas, so, anything cyber, endpoint protection, remediation, orchestration, so anything around cyber. Then we have automotive. Then we have a lot of AI requests, interestingly enough. And when somebody asks for AI, we understand that they don't really know, what AI means because it goes across verticals. Some questions around AR, VR, as you mentioned. It's across industries.
What about from a different angle? Because we had actually talked about something that I thought was super interesting, which you had a different angle on, which was demographics.
Yeah.
Where are you seeing more horizontally corporations thinking about different demographics they have to approach?
Okay, this is really interesting. I mean, if you think about it, the people that are of the ages, demographically, the ages of 15 to 44 are considered the millennials, so-called Generation Y. And Generation Y comprises, if you look at all demographics on the planet, Generation Y, the millennials, are 46% of the population. So corporates are basically looking at their main target market, who are the millennials, and thinking what are their characteristics, and according to that, changing their business model. So to give you, two examples of what are the characteristics of millennials, and Goldman Sachs did a really, really nice survey about this. So millennials are characterized by wanting to have a work-life balance. So if you asked the baby boomers, 65 plus, what is your definition of being healthy? 50% of the baby boomers would say not being sick. And if you ask millennials, what is your definition of being healthy? The vast majority of millennials would say eating right and exercising. Only 10% said being healthy means not being sick. So this is one thing. So work-life balance and wanting things really, really fast, wanting services to come to their home.
That's being lazy overall. That's
absolutely. And the second thing, which is the main thing, I think, is access, not ownership. And what does that mean? So again, the survey asked the millennials, what do you think about owning a car? And funny enough, 80% of millennials answered no in some way, shape, or form. Most of them said, I didn't even think of owning a car. Some of them said, it's not a priority. Some of them said, I cannot afford a car. So 80% said no to owning a car. So that's on a car. On housing, on living in a home, if you look back into the 60s, if you were 18 to 31 years old, 55% chance that you owned your own home and you were already married. Nowadays, or the survey was 2012, the 18 to 31-year-olds, only 20% of them have their own homes. So the really interesting thing that is happening on the demographic side is access, not ownership. Millennials want to access stuff, not to own stuff. And there's a lot of other reasons why. And this brings about marketplaces, which is, again, one of the things we're excited about. So the ride sharing, the car sharing, the Uber-like Airbnb, and also on the B2C side, although we're not into B2C, but things like having professionals come to your home.
We can plug two Gura companies here today. So,
Yeah.
So I don't want to take too much more time because I think I'm probably the only thing standing between all of us and lunch. But one thing I wanted to throw out there, which I thought was really interesting, and I wanted to see if there's any views on it. So there's a really famous investor whose name slips me right now, if you guys probably remember it, who said, if I'm in a room and I ask people about a particular sector, and if they're excited or interested in investing in it, and nobody raises their hand, I want to own that. So interestingly enough, nobody here mentioned blockchain. Now you did mention Fintech, so I'll give you some credit for that, so I have to be a little careful. But if we'd been here 2 years ago, or at least if I'd been doing this panel in the U.S. with a bunch of U.S. VCs 2 years ago, we probably would have heard all about blockchain. And it's had some disappointments. So I'm just curious, and maybe nobody has any thoughts, that's okay too, but any views on that? Are we ready to start taking off, or still dead, or what do we think?
I think like other fields that we just discussed that are hyped now, the same thing happened 2 years ago. So there were all those tens of thousands of people that wanted to hype this field because they purchased Bitcoin earlier, including me.
I still haven't.
Yeah, don't sell it. But we do see certain companies that are still at it. They raise the money. They are going to certain verticals. Some of them are now selling to banks and to governments. Some of them span it to be a more security-oriented company. And that goes actually along the way of the other things we discussed. All those technologies are not really changing the way of people doing business, in the sense that if you're a cybersecurity company for cars, you still have only dozens of companies to sell to, the car manufacturers. If you're doing healthcare, you still need to struggle with all the politics in hospitals. If you're trying to do something that will replace Google or do quick video streaming, you need to consider that Google and Facebook are pretty lean and mean in those sense. So if you look at it from a vintage perspective, which is very statistical, and you consider the entire market and how it's shaped, it's a different thing. But if you're a seed investor or early stage investor, you need to make one bet or few bets on this field, and then you have the same issues of whether this team will make it, whether they will be able to go abroad from Israel and sell it to big companies, whether they have enough cash to last. So we're still playing in the same constraints.
Yeah, we made a few seed investments in blockchain, and I think for the most part they haven't really, come to much maturation. And maybe to Orly's point, a few of them have somehow pivoted almost to the shared economy, which I think is, obviously a whole market that's really erupted. And I would say really maybe 2 words of perspective from a Silicon Valley investor, Hebrew words if I could, to entrepreneurs in the room, maybe to Rami's earlier point. I would just say, tzat savlanut. I think that's been some of the criticism that's been hurled at, the Israeli entrepreneurs. I'm very sanguine. I think we're on really a version 2.0 or 3.0, having invested back in the 80s in Israeli technology innovation. Many entrepreneurs now are on, I've myself invested in a few entrepreneurs. It's their second, third, fourth company. I think they're going to be patient, maybe to Rami's earlier point. Sure, there's going to be acquisition opportunity. We are basically investing in outsourced R&D effectively for the Microsofts, the Googles, the Oracles that manage $2 trillion plus are on their balance sheets, so they're going to be shopping. Israel's really top of mind. So I think it's an incredibly great time in 2017 and 18 to be an entrepreneur. There's a wealth of options that didn't exist 10, 15, 20 years ago when I was doing this. There's secondary markets. There's so many different opportunities for liquidity along the way, but rather to keep focus on building, today something that could be much more substantial, disruptive. I mean, that's one of the critiques I think that we hear. But personally at Blumberg Capital, I think our firm is incredibly bullish on the opportunity and obviously investing in amazing entrepreneurs that are here today. And I know that OurCrowd's invested in and others.
Thanks. I tried to get them to say, yes, I love blockchain, or no, I hate it, but I couldn't get it out of them, but I tried. So just quickly, and we're going to finish here, 30 seconds or less. Looking back on 2017, biggest surprise?
Trump?
Good.
I think food tech. Nobody thinks about food tech.
Good one.
Food tech, nutrition and food tech.
She means we'll still be eating in 2017. I mean,
I think about food right now.
30 seconds.
I have no clue.
Good. Like that. You're going to be right, by the way. So, Eyal?
I wanted to say Trump, but now that it's taken, I'll say peace, unfortunately.
I also have no clue. Just following on the blockchain, we're going to see a lot more industries that have nothing to do with technology jumping into the ecosystem, the startup ecosystem. This is my guess. How you exploit that, I have no idea.
Great. Thanks a lot, guys. This was a lot of fun. Thank you.
Thank you.